I want to focus on the word that you use. You're confident about the rest of the year. I'm curious, where does that level of confidence come from, given the angst that Nera and I have spoken about for the past hour? Is it manifest at all in your business?
It does. I mean, we had a real solid start to the year. In fact, we had a record level of signings and openings of new hotels around the world. That drove our net system size growth, the number of new hotel rooms we have around the world, up 5.7%. That drove underlying revenue up 3% and profits up about 5% when you factor in some timings for the UK portfolio transaction we did and some costs, and gives us the ability to raise our interim dividend by 10%. So a real solid start to the year. What gives us excitement is really the growth momentum we have in the business. Again, record number of hotel signings. So we're strengthening our existing brands where the bulk of our growth is coming through with Holiday Inn brand family. But we're launching new brands like Atwell Suites and Voco and Avid Hotels. We already have 200 hotels signed. And buying great new brands like Six Senses Hotels and Resorts and Luxury. So great momentum today, but even more exciting growth momentum in the future.
Keith, great to speak to you this morning. So lots of positive things in the pipeline for you. But of course, I've got to ask you about Hong Kong, because you do operate some hotels there. And I want to know whether you've seen any impact yet on business. And if not, what sort of impact you might be bracing for if the protests get any worse.
Yeah, as the demonstrations began, we didn't see any material impact in Hong Kong. But as they have progressed, we have seen a bit of a slowdown overall in some of the meetings and events and business there in Hong Kong. So again, that disruption and uncertainty will have an impact going forward on our business in Hong Kong. But overall, it's a small portion of our overall global business. So again, hopefully those will be resolved in the near term.
Certainly, but one of the dislocations where we're looking at now, Keith, is we're trying to define what's happening in the United States of America. I gave your Americas and then your US RevPAR. Your US RevPAR, I believe, is flat. What can you tell me about the traveling brands in the United States of America? Because those are probably the first to show us any signs of change in the economics of America. How's it shaping up?
Yeah, so on a macro perspective, what are we seeing right now? You're seeing industry forecasts clearly come down a bit going forward. You're seeing more muted RevPAR growth around the world. Now, the first half is impacted by some tough comparables around the world and in the U.S. You had hurricane impacts, you had things like Commonwealth Games and so forth. But clearly, we're seeing a slower RevPAR environment around the world. So the key is, how do your brands perform at the different segments? So are you gaining market share or are you losing market share? And so, for example, like in China, we outperformed the market by about 250, 280 basis points. So our brands are materially outperforming in China. And in the U.S., we're still seeing growth. We're seeing actually that we're performing in line with the market segments where we compete. But again, there's so much global uncertainty right now and headwinds, so that's going to have an impact on overall RevPAR on a global basis.
Keith, of course, one of the biggest uncertainties is the escalation in the US-China trade war. Manus and I just outlined the latest moves in terms of the US naming China an FX manipulator. The yuan is through 7. We have seen it stabilize a little bit today. You say that you're outperforming in your Chinese brands, but are you concerned about any impact on the Chinese consumer and therefore on your brands if we do see a continuing weakness in the yuan?
I think any global chief executives that says they're not concerned about a trade war between China and the U.S., the two biggest economies in the world, isn't really being honest with you. The great thing about our business, though, is they're principally domestic businesses now. So you look at our China business, we've just celebrated being there for 35 years. I was there recently. We have 400 hotels open, 400 plus in development. Principally a Chinese domestic consumer, so we're not that dependent upon international travel. So as long as we're seeing GDP growth and rising wealth in China, which we know will happen for the long term, it's a great market for the long term, actually performing quite well in the short term. But you definitely want to make sure that investor confidence in China doesn't wane and consumer confidence doesn't wane. And similarly in the US, we're seeing growth happen there, particularly in the leisure space.
All of this conversation that we're having, I think the warning or the reality check you gave us on RevPAR is going to be absorbed, but you have targets. That RevPAR compression, Keith, that you refer to, I just wonder, is there any threat to your margin target, which is 80 to 100 basis points increase in operating margin this year?
So when you look at the first half, we grew on an underlying basis about 30 basis points. But if you factor in some of those timings I mentioned, we were at about 110 basis points. And we've been able to deliver that 80 to 120 basis points of margin growth year after year. And we're very confident about that. The reason is, even in a more muted RevPAR environment, we're showing record hotel openings and room openings, that net system size growth. That 5.7% drives revenue growth, profit growth, significant cash generation, will let us to raise our interim dividend and drive our business going forward too. So again, we have two levers to grow this business. It's RevPAR, but it's also how many hotels we're opening up going forward. So our existing brands and those new brands will drive that growth for today and for the future.
Keith, I've got another question for you in terms of the global risks out there, because, of course, we have a new Prime Minister in the UK and a lot of people seeing an increased risk of a no deal or perhaps a general election in the UK. Can you talk to us about any more preparations that you're making for the business with the potential increased risk of no deal?
Yeah, the no-deal Brexit issue is one that challenges most industry business leaders here in the UK. I mean, there are a few aspects to it right now. Fundamentally, it's the free movement of people. It's one of the things we've been talking to the government about, particularly in staffing. When you look at the UK hospitality industry, a significant portion of them are staffed by UK nationals that is skilled labor, but some of the policies being put forward by the government would exclude that, which could damage the tourism industry in the UK for the long term. We're making sure we're highly engaged with government through the CBI as well to make sure they really understand the core issues, to make sure that the tourism industry, which is such a key driver for growth here, 1 in 10 jobs in the UK, has the ability to prosper and grow going forward. And we would urge the government that a no-deal Brexit doesn't help us in that situation at all.
And again, another very clear message. You say you're working through the CBI. Has government called you? Have you had conversations? Have you been brought in and asked about the impact of Brexit? Have you had direct government conversations and influence?
Yeah, I've been in number 10 a number of times from recently in the past year, talking about our industry in general, the job creation, the value creation that hospitality, tourism, and hotels bring to the UK economy going forward, and how can we work together. So we have created a sector deal with the government, which has been great. We now need to continue to move forward on that and creating apprenticeships, investment in new hotels, but really providing clarity to EU nationals about their ability to work here for the long term, clarity about what skilled labor will be allowed to come into the UK, will enable people to have the confidence to invest in what is an amazing destination and an amazing industry too. So I will continue with other leaders in this industry to engage with the government to make sure that we're doing the right things.